Before we get into today's edition of Dividend Dive, I have a question for you. Are you tired of getting paid pennies and interest on your savings account? Me too. That's why I listen to Dividend Dive, the high-yield dividend stock show that'll make your wallet say thank you. But, did you ever want even more insight into high-yield dividend stocks? Or better yet, would you like to get rid of ads like this one, so you only hear the actual episode with no ads at all? With our Patreon membership, you'll get access to exclusive benefits, including ad-free episodes, digital stock pick summaries, and live Q&As with our team. Plus, you can join our private community on Discord, where you can talk about dividend stocks and share your own investing tips. So, what are you waiting for? Join the Dividend Dive Patreon community today, and let's make some money. Go to Patreon/Dividend Dive. That's Patreon/Dividend Dive. Or just click the link in the description of this episode, and thanks for your continued support of our team. Now here is what you came for. It's time to dive in.
Hey there, my fellow investors. Welcome back to Dividend Dive, where we talk about high-yielding dividend stocks. Today's episode is going to be about a place where you may be getting your daily sustenance, your local grocery store. But it could be a little more than that, as former First Lady Michelle Obama once said. The grocery store is a place where we all have to go to get our food, but it is also a place where we can come together as a community. So today we are highlighting stock symbol SRRTF, which stands for Slate Grocery REIT Class U Units. Yeah, that's another mouthful. In fact, you should check out yesterday's Dividend Dive episode 3 for an even longer stock name. So, let's start with the basics. What are Slate Grocery REIT Class U units? Well, simply put, they are a type of investment that allows you to own a piece of a real estate investment trust that owns and operates grocery-anchored properties in the United States. With grocery tenants names like Kroger, Albertsons, and the biggest name of them all, Walmart. In layman's terms, it's a way to invest in the grocery real estate market without having to actually buy and manage a property yourself. Now you might be wondering, why should I invest in this? Well, for starters, the demand for grocery-anchored properties has been on the rise, especially since the pandemic hit. With more people staying at home, the need for local grocery stores has increased, and that means good news for investors in this market. Let's dive a bit deeper into the financials of SRRTF and its stock price performance. As of March 2023, SRRTF had a market capitalization of $589 million and a dividend yield of 8.82%. The company's revenue for the previous year was around $91 million, with a net income of $18.5 million. In terms of stock price performance, the Slate Grocery REIT Class U units had been showing positive momentum leading up to the end of 2020, but the price took a dip in early 2021, possibly due to the uncertainty caused by the pandemic and the effects it could have on the grocery-anchored property market. However, since then, the price has been gradually increasing, with the price having recovered and showing positive momentum once again. As of our show date of May 12, 2023, the price is trading around $9.69 a share. Next, let's talk about the risks of investing in SRRTF. Firstly, like any investment, there is always the risk of losing money. The value of the units can fluctuate based on market conditions and other factors, such as changes in interest rates, economic conditions, and industry trends. In addition, the performance of the underlying properties owned by the real estate investment trust can also impact the value of the units. Furthermore, the real estate industry is subject to a wide range of regulatory, environmental, and legal risks, including zoning and land use restrictions, environmental regulations, and liability for environmental contamination. Finally, investing in SRRTF also carries operational risks. The trust is responsible for the management and operation of the properties it owns, which can include risks such as tenant turnover, maintenance and repair costs, and potential legal disputes with tenants. It's important to consider these risks and conduct thorough research before making any investment decisions. Always seek the advice of a financial professional before investing in any securities. While investing in this market can be lucrative, remember to always do your due diligence and invest at your own risk. Thank you for swimming with us today, and we look forward to seeing you next Monday for the next episode of Dividend Dive.
Hey there, before we end, we want to make sure we're transparent with our listeners, and we want to disclose that the podcaster may own stock in this company. Now we want to make it clear that we're not financial advisors. and this podcast is for educational and entertainment purposes only. We're not making any recommendations to buy or sell any securities. However, we understand the importance of FTC compliance, and we want to let you know that any opinions expressed in this podcast are solely our own and are not influenced by any potential stock ownership. At Dividend Dive, we strive to provide accurate and unbiased information to our listeners. We believe in transparency and integrity, and we want you to have all the information you need to make informed investment decisions. As always, do your own research and consult with a financial advisor before making any investment decisions. Thanks for listening, and let's keep swimming. That's it for today's podcast. Thank you for listening, and be sure to hit that subscribe and notify button. If you have any questions or comments, please leave them in the comment section below. Also, let us know if there is a high-yielding dividend stock you would like us to review. See you next time.